Hello, fellow Canadians. Today, we're diving into the latest updates shaping the Canadian mortgage market, focusing on the recent support for a potential interest rate cut in July by the Bank of Canada. I'm Alexander Gasenko, your trusted Canadian mortgage broker. Let's dive into the latest Canadian mortgage updates. The latest data supports the possibility of the Bank of Canada cutting interest rates in July. According to the Financial Post, several indicators are aligning in favor of this move. These indicators include falling core inflation, weaker than expected GDP growth, and rising unemployment. The Bank of Canada has been closely monitoring these economic metrics, and the recent data suggests that a rate cut might be necessary to support the Canadian economy. First, Canada's core inflation rate has been steadily declining for 5 consecutive months and is now sitting at 1.6% as of April 2024. This marks a significant decrease from earlier in the year and brings the inflation rate well within the Bank of Canada's target range of 1 to 3%. Core inflation, which excludes volatile items like food and energy, provides a clearer picture of underlying inflation trends. Second, real GDP growth in Q1 2024 was only 1.7%, significantly below the Bank of Canada's forecast of 2.8%. This slower than expected growth signals that the economy is not as robust as anticipated by the Bank of Canada. Additionally, Statistics Canada revised fourth quarter growth down to 0.1% from 1%. This revision and the current weak growth rate suggested that the economic momentum is slowing down, increasing the likelihood that the Bank of Canada will implement a rate cut to support economic activity. Third, the unemployment rate increased to 6.2%, up by 1% from May 2023. This consistent rise in unemployment indicates a softening labor market where more people are finding it difficult to secure a job. A higher unemployment rate often prompts central banks to consider rate cuts to stimulate the economy by making borrowing cheaper, encouraging businesses to invest, and hire more workers. The financial markets are already reacting to this potential rate cut, with traders increasingly betting on the likelihood of this move. This shift in the market sentiment is reflected in the falling yields on government bonds, which often serve as a benchmark for mortgage rates. The Canadian 5-year bond yield has been steadily dropping since it peaked on April 25th at 3.93% and is now at 3.31%. This decline in bond yields is significant because fixed mortgage rates are tied to bond yields. In other words, when bond yields fall, it typically leads to lower mortgage rates. This is particularly important for those looking to enter the housing market and refinance their existing mortgage. Mark your calendar for Wednesday, July 24th, 2024, which is when the Bank of Canada will announce its next interest rate decision. I will be covering all the news and events leading up to this date, so make sure to hit the like button and subscribe to never miss an important update. Thank you for tuning in. If you have personal mortgage questions, for a limited time, I'm offering a free 30-minute one-on-one consultation to help answer them. Click on the link in the description to book your time slot. I'm Alexander Gasenko, your trusted Canadian mortgage broker. Until next time.